I'll be honest. It feels right now that I um not like riding a bike at the moment. But do this for 6 years. You have a process. I'm going to try my best to remember this. And so, of course, we're going to start with our high time frame. And what you're seeing here is me going through this first time, real time. So, yeah. First things first, we reached 108,000 on Bybit, the inverse perpetual pair. So, nothing to really see there per se. 6 months. Okay, yeah. So we just have shot off, right? Even the monthly, no really horizontals. It's just been so crazy. Okay, so we do have a little bit of overhead. We have a weekly here untapped. Really moving at the speed of smell right now. It's been so long. Okay, so moving to the daily. Yeah, so I'm just going to take a step back and zoom out. Consolidation here. We saw price finally back test the point of control. Then the Bay Area high acted as resistance briefly. Pinged around here. Finally broke over this. And then off to the races. So, it's a separate area of volume here. And so, but I'm going to go ahead and throw this in and see what we have total. Okay, so there's that. So daily wise, I'm just looking for okay, here's a bit of daily support there, untapped. There's well. And then overhead, some resistance there. Resistance. Yep. These are the levels for that right there. Alright, now next, I'm just going to remove this for a second. Let's pull our trusty. Let's go with some higher time frames here just to get a look for some impulsive candles here. Let's see, make sure we're on. Check both modes. Okay. Just looking for a bit of confluence here. Okay. Daily there. Okay, so there's that right there. All right. Now we're cooking a little bit here. Just going to take a look at the 3-day. Then the 2-day. Geez, I really need to. I'm going to update the subscription after this. So there's that. Make sure I get this captured correctly here. Let's go a little bit further back and just see. Alright. Yeah, I like where I have it right here. So that's at 89,909. Alright, so the 1-day. Okay. So we have a daily there. 2 dailies really kind of relatively close. What would this look like? Let's just slap on all the fib levels here so we can take a look. Standard fibs. That's our 786 right there. I'm going to go back to my CC and clean this up a bit for you guys. So, boom. And I'm just going to hide that level. That one. This daily resistance overhead is an important one, though. You can see but for now, I want to look for a long here, and so we're gonna go ahead and get rid of Where's it at? There she is right there. Alright, so I'll leave this daily here. This is the one I'm concerned with right there. Okay. So look. What do we have confluence-wise here? Dashed, extended, not extended. Wow, I haven't been here in so long. Alright. So you can see at 93,000, that's still not the bottom of this volume profile. Okay, what we have here is the CC, the 618, aligning. The 66 essentially is aligning at our 6, at our daily level, untapped. We can zoom in on the 4 hour. I want to take a look at this wick when it came down. So look when we wick down here at 90,000. Alright, so what we need to do is go back a little bit because none of this, we're pulling from this low down to this high here, but actually we have to act like really and truly this hasn't been made yet. So pulling this over, our high was actually right here. Okay, so I want to see what we had. What made it come back? Looks like a few things did it. Okay, so it looks to me that that 618 said 89, 634. Yeah, so this was just front run barely. I think that 618 has propped it back up, and now coming to it, now we have this newer high made. Same thing. Okay, it hasn't quite got here yet, but here's what I can surmise. Here's, we're trading probabilities here. All right, so along here, it's a good way to ladder into this. All right, so our really strong confluence is this value area low for this current time frame, paired in with this daily untapped, and right in between the 618 and 66. So most people are probably going to want to enter at the 618. I think there's more confluence at the 66. Call it the golden pocket if you will, whatever, the 65. But how I would go about doing this if I were to be a trading man, one order here, maybe even possibly front run that, so you don't miss out on a buy. And we're just going to call this limit order. One there. So if you want to go in whatever amount you want to go in with your risk management, take into account your portfolio, only wanting to lose 1%. 1.5%, 2% tops should you lose a trade. You know the formula. Look at my YouTube videos if you want. So my go-to move is like front running the 618, one right in the middle of the CC, which is perfect because there's the value area low, and then one really at our third. So 33%, 33%, 33%. Those limit orders, and then you can ladder yourself into this. And if something happens, say price comes down like this, let's say we only get 2 limit orders filled and shit starts going back up, that's not when you go ahead and just ape in with this third limit order. What you would just do is you de-risk yourself, you cancel that limit order. I mean, you leave it in place if unless there's like some shakiness and it starts coming back down and it's not holding support. It's best not to just don't second guess your plan, but basically if we start moving up like this and you have 66% of your position filled, and don't ape in with like I gotta get this last bit in, because now you're moving your entry close to where it is, and then it could reverse. Remember, we're just trading these probabilities. You can have 4 limit orders laddered in, one front running the 618, one at the 618, one in the middle of the CC, and then one at the 66. You have 5 if you want. Just divvy it up, almost like dollar cost averaging. That's kind of the best way to go about it, because there's a lot of uncertainty with this. It really is. And there's other correlations in like looking at order flow mainly on Excel charts, but I mean, people think that this is over with here. So let me just finish this position out. That would be the long. That's the thing right now that I see, and people who are buying in right here. This is a lot of institutional buying, and probably from you guys as well, the general public. But I mean, this is a clear as day technical sign that we need to come a little bit lower, and take out this liquidity here lower, and then I mean these confluences were really easy to see. They really we're pulling from this really impulsive up to the high here. Again, let's double check log. Yeah, so last time it came down here, remember, the 618 was respected, bounced off that. And so we got this value area low range here, untapped daily, and then remember, mind you, I took off this daily here. Remember? Boom. So what that's going to be there as well, a 786 right there, kind of close by, you know. And you know, we probably can hone in just even a little bit further and make sure we get the exact. Let me get rid of this volume profile for just a second. Yeah, I've got to get a subscription. I mean, I can't operate like this. So 87,322. Yeah. Look, I mean, look at this. All right, so 786 is right close by. I mean, in general terms speaking. So if all these levels don't hold, I would even go so far to say as, you know, remember, we're just looking for this number to be 3 or greater, you know, to trade our probabilities. You know, 3 to 1 minimum risk reward. Okay, I know it's been a while. You guys don't remember, but it's, you know, if this were not a probable trade that we could go higher and we couldn't eke out a profitable trade, then we wouldn't be trading this. But so far, I can even go a little bit further. Boom, I can even cover myself with a 6% stop loss. Again, you know, you want to know how to do that, go through some of my other YouTube videos, but my people who trade in my Telegram group know there's a formula for it. You're not going to lose 6% of your portfolio, but we can enter and ladder into this long here when it comes down to this level. And so, real simple. All we do is come here, and this is kind of my go-to move here. I just come right here, hold shift, come up to the last low of it, and I move over here, boop, hit the plus sign. We're going to add an alert. So that alert is 92,229. I'm sorry, 90,993. Okay, and then I like to go half of that. All right, so check this here, and then we're going to go here. You can kind of see that there. So we'll add another one. Yeah. Oh, why is this gray here? Let's see. Hold on. Let me stop this alert because that's too close by, actually. So from prices right there, yeah. So 92,000. I'm gonna alert there, and then we'll go half the distance from there as well. So right at that alert, and then another one there at 91,728. You want to give yourself multiple alerts, you know, where it's coming down, you know, not just one where you got, oh, I got to stop everything I'm doing. No, you don't do it that way. And then we'll give us a third one. You guys remember this? So it's like, you have time, but really, if you do all your risk management and you want to ladder in like I showed you, you should have them allocated already, just on the books, you know. Your stop loss set. Now, this is not financial advice, and I'm not saying this would be my position size or anything. I'm just saying how I would do my stop loss would be I'm covering all these confluences. I'm covering this. So ladder it in. It's got 5 major supports. It's got to break through if it wants to follow the downside. If it does that, it deserves it. You know. You win some, you lose some, but this will be a 4.4 risk reward trade here, and actually I would go a bit further below this daily level just in case people want to push it down. So we're looking at about 3.75 risk reward here with a 5% stop loss. You know, that's, I'm not saying I would, not financial advice. That's about how I would do it. You know, I don't need to like snipe in and get like the maximized risk reward, because if I only have a 2% stop loss and something crazy happens, boom, I'm stopped out the trade. I'd rather give myself more cushion and just have, you know, not make it just a little bit less money, but win the trade. You know, that should be the goal. You know, that's why these 3 to 1 risk rewards are so important, because you know, we can lose 66% of the trades we just win, which is like an insane amount to lose. You guys know our win rate is like ridiculous. Like, you know, our win rate's like 70 something percent. So if you lose 66% of your trades, you really need to be, you know, evaluating your setups and all that, and going back to the drawing board. But going about this way, 3 to 1, you can literally win 33% and you're broke even. So it's very important. But yeah, don't be fearful of Bitcoin crashing. I know everyone's portfolio, they were excited about it and all that. I promise you, Trump's not even in office. They're going to be adding Bitcoin to the national treasury and all this. A lot of promises. Michael Saylor just bought another 100 million. I mean, it's all over. And if you're selling your Bitcoin now, you're selling it to major corporations. There's going to be a shortage supply, a shock supply in the near future. I can promise you that. And so, basically, 99% of all Bitcoin. No, I'm sorry, 98.5% of all Bitcoin has been mined now. So for the next 50 years, you're only going to get the next 1.5% of supply, because that's how the halving works. So right now is the time to buy while you're early. Yeah, I'm sorry it's been such a long time since I posted a video. I just wanted to still see if I remember how to do this stuff here. Our last 4 Bitcoin trades, we all 4 spot on, like I showed you before. That I got rid of the let's see, the long position right here. Is that it? Yeah. I mean, we nailed that to the T. You can go watch my last Bitcoin video. I gave that setup about 7 days in advance before that. Actually, about a week and a half. Called the level to the T. I mean, you can't even make that. You can't just go to my last Bitcoin trade long for you guys, and this is literally what happened. It's pretty insane because we were in a downward channel. I was telling you guys that's the most bullish form of consolidation is a downward trading like this. There was like 7 other confluences, and what happens? We found this crash. We took the liquidity out. I felt like this nice, and dude, I mean, look at that. Let's zoom in. I never even patted myself on the back for this. I never did. I was just like, just going through life and stuff, just not even worried about trading or anything, just letting the portfolio do whatever, chilling with family. I mean, look at this. That was 58,891. So our entry was 59,000. Dude, we were $300 shy of getting that absolute bottom, and we wrote it up on 100x, and it was 5,000 percent,